Alright guys, 5 o'clock here in London. Let's have a look at the main move in the market today. If we start with the pound, because we had a pretty quiet morning session. Main event was the BOE interest rate decision at 12 o'clock.
Crossing from
So the market was interested in having a look at the vote split between the different BOE board members and the minutes release. So the vote split was 7-2. That was what the market was expecting. And if we have a look into more details at what happened at 12, so vote split 7-2. First reaction, knee-jerk reaction seen in the pounds was to the downside, because the most hawkish market participant was a bit disappointed by this.
great timing.
Tested the S1 level and then only recovered. And as I'm speaking, pound is still making new highs. So many reasons for that. First one is the minutes were more standing on the hawkish side than the dovish one. To go into more details, you had a majority of MPC members that judged it that if the economy continues to follow a path consistent with the prospect of a continued erosion of slack and gradual rising underlying inflation pressure, then some withdrawal of monetary policy stimulus is likely to be appropriate over the coming months. So some pretty hawkish comment there. That's why you've seen the pound pushing to the upside. So a few minutes after, managed to break above the pivot, tested the R1 level of the day here at 132.99, which is also 133 psychological handle. And then we slightly continued to push higher. And at around 4 o'clock this afternoon, you had some unscheduled comment from Mark Carney, Governor of the Bank of England, who stated that, let me just read this. Yeah, the UK, let me just find the comments, bear with me 1 minute. Yeah, but BOE Carney says the probability of a hike has definitely increased and that the bank rate may be adjusted in the coming months. So some more hawkish comments at 4 o'clock from the Governor of the Bank of England, and you've seen this reaction here in the pound. Helped to make new highs for the session, tested the R2 level at 133.88, and now we're trading at, well, we're actually managing to break above the 134 psychological handle. So that's for the pound. Other economic data schedule of the day was the inflation readings for the US. So we're expecting core CPI 1.6 and then CPI year on year 1.8. And then we had for core CPI year on year 1.7, so a slight bit, and the same for the CPI year on year 1.9 compared to the 1.8 expected. So let's have a look at gold here. The first reaction was to the downside because of positive data for the US economy, So that's this candle that you can see here circling in my charts. But then only a few minutes after we recovered, this move to the downside. So that was explained by the different sector of the inflation reading. So let me just transition my screen here to show you the breakdown. So this chart here from the Bureau of Labor Statistics, you can see here the breakdown of the inflation reading, and as you can see, the big blue candle here is the energy sector, and this jumped to above 6% is related to the gasoline prices, increased 6.3% after being unchanged in July, and obviously gasoline rising recently was related to the hurricane situation in the US, so it's more of a one-off event. That's why it was a really short-lived reaction here in gold and across the other assets as well. If we have a look at the euro here, first reaction was US dollar strength. Just go 130. So US dollar strength, euro currency pair pushing to the downside, testing the S1 level to only recover a few minutes after. And at the same time, I think it was at 139, so 9 minutes before the release, after the release story, you had some North Korean news saying that the North Korea is ready to test another missile, and this time would be ICBM. So that helped the US dollar weakness and the gold recovering from the knee-jerk reaction seen following the inflation reading from the US. Another interesting product for the day was oil. Let me just make this chart a bit bigger. Oh, sorry, I didn't transition the screen. Let me go back to the euro. So the euro here, I was showing you the reaction of the 130 data. Let me just go back here. So I was showing you this one. So this one was the knee-jerk reaction because of a bit in the inflation reading. So US dollar strength, euro pushing to the downside, testing the S1 level of the day. And after that, because the reason why the inflation was a bit this month is related to a one-off event, the energy sector, and the gasoline related to the hurricane situation. That's why it was a really short-lived reaction, and then Europe pushing back up. And then 10 minutes after the release, you had the news related to North Korea that are ready to test another missile. So then gold recovering, and then this candle here, I think, US dollar weakness based on this North Korea news. And the other product that I want to have a look at today is oil. Oil managed to break above the 50 psychological handle, and the high of the day is actually at the 50.50. So oil has been today following the trend that we've seen for the past few days. So following the hurricane situation, and more recently you had a lot of OPEC comments regarding the fact that they are going to extend the production cuts for the OPEC members for a longer period than 3 months after the end of the initial agreement, March 2018. So that's obviously positive for the price of oil. So this morning managed to take the high of yesterday here, 49.41. Managed to break above the R1 level, managed to take the 50 psychological handle, and then later at around 3 o'clock managed to take the R2 of the day, and then we tested the 50.50, which is a psychological handle. So yeah, a lot of activity again in the market today. Just to conclude this wrap, let me just have a look at the calendar for tomorrow. So tomorrow, Friday, 15th of September, pretty quiet morning. Yeah, actually no important economic data for tomorrow morning, but then it starts at 1:30 with the US retail sales. Good indicator of how well the US economy is doing. So that's for 1:30 for the month of August, and then 2:15 you have the industrial output for August as well for the US. And then 3 o'clock you have University of Michigan consumer confidence for the month of September. So preliminary reading, this one usually T1 data, likelihood of moving the markets. So tomorrow morning, pretty quiet session, but then in the afternoon, a lot of US economic data schedules. So that's it for the day. More hawkish interest rate decision from the BOE. And then you have better than expected inflation reading for the US. But that was mainly related to the fact that you had a jump in the energy sector regarding the hurricane situation and the rise in the price of gasoline. That's why it was a short-lived reaction. That's it for the day, guys. Hope you had a good day. Enjoy your evening, and I'll speak to you tomorrow. Thank you.